Hi, everyone. This is Jonathan Compton with the Office of Special Education and Early Learning, and I'm here to present on MOE and Me about your maintenance of effort within your district. This is a presentation that was done back at our DOS Institute in September 7th through 9th in Lexington, and we are doing a recording of that MOE presentation for you. So I'm going to talk to you about maintenance of effort today and just general requirements around that. The main piece of maintenance of effort is maintenance of effort compliance. That revolves around previous expenditures out of your general fund. There's two pieces to maintenance of effort. There's maintenance of effort compliance and maintenance of effort eligibility. We're going to focus mostly today on maintenance of effort compliance. I'll briefly touch on eligibility toward the end of the presentation, and we'll just talk about that, for a minute or two. But compliance is by far the most important piece of maintenance of effort and what you need to worry about the most complex piece, and that's what we're going to focus on in this presentation today. With maintenance of effort compliance, as I said before, that revolves around your past expenditures, and the gist of it is you're required to spend at least as much local or state and local funds during the current fiscal year as you did during the previous year to support students with disabilities. Again, the main thing to think about when you're thinking about maintenance of effort compliance is that relates to your general fund expenditures, around your state and local funds. And your state and local funds make up your general fund expenditures. There are 4 tests that revolve around MOE compliance, and you only have to meet one of those 4 tests. If you don't meet a test, there are allowable exceptions and an adjustment for reduction, which could help you meet the test. And again, remembering with MOE compliance, that focuses solely on expenditures towards students with disabilities for the applicable compliance year. And we always look back for MOE compliance for the year, and that for this current year that we've went through, that looked at the 2021 fiscal year for your expenditures. And the upcoming MOE compliance that you'll be getting in the spring, that will focus on the 21-22 fiscal year or MOE compliance year. With MOE compliance, you must repay funds if you don't meet at least one of the 4 tests. And that's definitely what we want to avoid. We don't want you losing $1 in supporting our students with disabilities. And you must repay those funds if you go 0 for 4. So it's extremely important to go through every avenue possible to try to meet these tests, when you get your MOE compliance. If for some reason you go 0 for 4, you exhaust all avenues, and you can't meet any of the tests, then in the end, you would have to repay out of non-federal funds or funds for which accountability to the federal government is not required, the amount by which you fail to maintain effort. And if you're 0 for 4 on the test, the way it would work is you would have to repay the least amount of the 4 that you did not meet. So if on the 4 tests, let's say you did not meet by 25,000, 50,000, 75,000, and 100,000 on the 4 tests, then the 25,000 would be the one you'd have to repay. And again, we do not want you to lose $1 in supporting our students with disabilities. So again, MOE compliance for the, of course, for the finance director, the DOS, extremely important that you're well versed in this MOE compliance knowledge. So the current MOE compliance year that has been reviewed this year and this past year is the 2021 MOE compliance year. And most of you that are watching this now have met MOE compliance for that 2021 year. There's a small handful that still hasn't, that we're working on to meet. But if you're watching this, most likely you have met the 2021 fiscal year, and you'll be, coming up on your 21-22 MOE compliance year in the spring. When that spreadsheet is sent, you initially would have 30 days from receipt to submit your MOE, and that's just the initial due date. So I'll always give you initially, say, please, respond within 30 days. Many districts will have met, the majority of what happens, and I'll give you each scenario as far as districts throughout Kentucky, and we have 171 districts that are subject to MOE compliance. The majority of of this or the main situation that happens is you'll have a district, they'll meet at least one of the 4 tests, but they still have work to do, because if you meet 1 for 4, you still need to look for exceptions. You still need to make sure you agree with the numbers, and that, and also look into munis miscodes if you have any, and we'll talk about that in a bit. But even if you meet one of the 4 tests, there's still work to do, and you want to work with me on trying to get to a situation where you put in all the exceptions that you can and make sure that everything is correct. Because what'll happen is, if you don't do anything and you're still meeting one of the 4 tests, then you could hurt yourself going into future years and make it tougher to meet a test and potentially get into a payback situation. Another scenario that districts have, and I think this year we had around 30, that you will go 0 for 4. You'll get your spreadsheet, you won't meet any of the tests, and you'll be 0 for 4. And then you'll look on there and see how much you're short, how much you did not meet the 4 tests. And from there, you'll have to work diligently to try to meet at least one of those tests through some of these avenues that we're going to talk about in this presentation. And then the other scenario, and there's a few of these as well, is you go 4 for 4 on the tests. And if you go 4 for 4 on the tests, then you want to verify that all the numbers are correct and there's no munis miscodes, because if you have spent too much and on one of the tests, if you've expended too much, then it's possible that you're going to make it tough on yourself the following year to meet. So you just want to make sure everything's correct there. So those are your 3 scenarios. When you receive the spreadsheet, you're going to be in one of those 3. And all of our LEAs in Kentucky, was able to meet compliance for last year, for the 19-20 year, and in previous years. Again, there's 4 tests to determine if you've met MOE, and those 4 tests are state and local total, state and local per capita per student, and then local per capita per student. Those are your 4 tests, and you only have to meet one of those. And one with MOE compliance, sometimes 1 for 4 is as good as 4 for 4. It just depends, because if you've went 1 for 4, you've met one of the tests and you've barely exceeded your threshold from the previous year, then the amount that you're going to have to meet for the following year is going to be lower. Let's say you go 4 for 4, but you go way over in expending for each test in meeting, then it's going to make it tougher the following year to get to those higher numbers. Exceptions in the adjustment. So you can use exceptions to make the baseline amount that you're required to meet go down. And exceptions are extremely important. And it's one of the most, if not the most important thing to think about when going back and, trying to meet MOE and going through this. Of course, the most important thing is out of your general fund to make sure that you're spending enough towards your students with disabilities, each year, and that you're meeting that threshold, and hopefully just going a bit over that threshold, but not too much. But exceptions is a way that you could make the baseline amount that you're required to meet go down. It's always a good idea to use exceptions, even if you pass some or all the tests. You want to use exceptions if you can in any of the scenarios. It would potentially lower the amount of general funds that you would have to expend, and it could reduce that threshold for the next compliant year in certain situations. And if you go 0 for 4 on the tests, it is so important that you look for exceptions. Otherwise, you're looking at that payback scenario for your district. There's 5 types of exceptions in the adjustment. 2 of those are automatic, and then 3 of those you would look for on your own as far as the exceptions go. I will talk about the first 2 automatic exceptions, which shows up on your spreadsheet, and then I'll talk about the 3 exceptions that you should look for on your own. As far as the automatic exceptions with the first one, if you receive an increase in your basic IDEA allocation, you can take an adjustment for half of that increase if you meet 3 requirements. You must have provided FAPE, you must have received a MEET under your KDE annual determinations, and you can't be under CCEIS, which you cannot be found to have had significant disproportionality, during that compliance year and been under CCEIS. If you meet those 3 requirements and you received an increase in your basic IDEA allocation, you can take that adjustment for half of the increase. The second exception, which is also automatically calculated, is the child count reduction exception. And this one's pretty simple. If your child count goes down, you're going to get that reduction automatically. And this will also show up on your MOE spreadsheet. So you can see that adjustment that I talked about, and also for that previous one where if there's an increase in your basic ID allocation, you can see that. And you can also see if you receive the child count reduction exception on your MOE spreadsheet on the orange tab on your exceptions tab. Now, the 3 exceptions that you're required to look for on your own and enter. And it's very important every year that you look for these. And the best practice is, as you go through a year, once you understand these exceptions and how they work, is just to notate them, maybe have an electronic file. And when you see that you have one of these exceptions, to file that away. And then when the time comes to use it, you'll be able to. The most common exception that you would look for on your own, and this happens in most districts every year, is the voluntary departure of staff exception. And the only thing that that must happen here is the departing staff must have been paid out of your general fund, out of your state and local funds, and must have been provided special education related services and been there that previous year. So if you say they were providing, even partially, if they were providing special education services and their position was special education related, then this could be a potential exception you could use. As far as looking at this in more detail, I'll give you a few examples of possible scenarios in which you could use this. One, let's say you have staff retire. You have a special education teacher, or again, it could be anything special education related. Teacher, instructional assistant, could be a bus driver, lots of other positions it could be, but a special education related position. And if they retire, let's say they retire June 30, and then July 1, someone else takes their same specific position, then you would be able to use the person that left, their salary and benefits that was paid out of your general fund. And then for the person that replaced them and their exact position, you would have to put their salary in as an offset or replacement. And typically the person going out is making more than the one coming in, so it's still going to help you. Now, there's many scenarios where someone would leave and there would be no specific replacement for that position. That would be a massive exception you'd be able to use and really help your MOE. So let's say you have a special ed related position leave, and then that same exact position is not replaced. If that happens, then you're able to use the entire amount of salary paid out of the general fund and benefits paid out of the general fund towards this exception. And let's say you don't meet a test by, let's say you underspend by $100,000 and for your overall expenditures. So for your overall expenditures, you underspend by $100,000. And then you have a staff come in and then they aren't there that next year and you're able to use this exception, then you're able to use that entire salary plus the benefits. So let's say they're making $70,000 and there's $20,000 in benefits. Let's say, I'm just throwing numbers, that's $90,000. So if you're $100,000 short, you have $90,000 there, that takes you to $10,000 short. So that can really get you quickly out of an MOE problem for these voluntary departure exceptions. Now, something else these will do is if you have these exceptions and you spend less. So let's say overall you spend $50,000 less than you did the previous MOE year, and you're going to be $50,000 short. But you also know that you're going to be able to use the voluntary departure exception or multiple voluntary departure exceptions for more than that $50,000, and you have those, and you're going to be able to use those for that applicable compliance year. You can underspend by that $50,000, and then what'll happen is when it comes time to do your MOE, you'll put those exceptions in, you'll still meet the test, and then the following year that would reduce your overall spending threshold to that new amount, which would be $50,000 less. So that's an example where you could have a voluntary departure exception, know about it, spend less, and then your threshold goes down for the following year. So the voluntary departure exception is a very important exception. And with any of these, as I go through this recording, as I tell everyone, feel free to, to email me, call me. I put my cell phone out there. You're more than welcome to call me on my cell, and I'll help you as much as I can in all these situations. But this is your most important exception in looking at, because you're probably going to have this a lot of years, and you want to use this every time you have it. And the only other thing to remember about the voluntary departure exception is that those must be documented. So we do not require you to submit the documentation to us for this exception, but very important that you keep these exceptions documented, for future audits or any other things. The second exception that you would look for on your own is a long-term purchase made out of general funds, which is special ed related, and it has to cover at least 2 fiscal years. Now, these next two exceptions that you look for on your own that I'm going to talk about, they're not as common. They do happen, but not as often. And with both of these exceptions that I'm getting ready to talk about, unlike the voluntary departure exception, with these two exceptions that I'm going to talk about, you have to get these pre-approved. So if you have one of these, then you would submit an email to me for initial approval. And then if approved, OCIL, we would enter the exception onto your spreadsheet. So if you have one of or you think you have one of these next two exceptions I'm going to go into, then you need to get pre-approval before using it. And you just initially email, and then we would go from there. So this one here that you would look for on your own, again, it's a long-term purchase. Again, has to be made out of your general fund, out of your state and local fund, and has to be special education related, and has to cover at least 2 fiscal years. So those are all the requirements around that. And another piece of this exception, and again, this is the way it's written in the, in the regulations. So again, if you look at this and you're like, well, this sounds odd, or why does every piece occur here? It's the way it's written, and it's the way we have to abide by. So an important thing to remember about this exception is that you only get to include the amount you spent the last fiscal year and not every year. So a lot of things to think about with this exception. Long-term purchase made out of your general state and local fund, has to be special ed related, has to cover at least 2 fiscal years. And if you get it, you only get to include the amount you spent the last fiscal year, and has to be pre-approved through us. A few examples of this one. One would be construction. Let's say you have some kind of construction that's special ed related. That could very likely go over 2 fiscal years. That's probably the most common one. And again, this one doesn't happen real often. And there's also plenty of other potential long-term purchases that could be made out of your general fund, special ed related, and cover 2 fiscal years, and you're making payments on. It's large. It has to be a significant expense. And if you think you have this, email me, and we'll go from there. The last exception that you would look for on your own, and this one happens a little more often, but again, this one also has to be pre-approved. This one doesn't happen nearly as often as that voluntary departure exception we talked about earlier, but it happens more often than that, the most previous exception we just went over, the most recent one. But with this one, if you have an exceptionally costly program, because the child's left the jurisdiction, or if they've aged out of special ed, or they no longer need that program of special ed, and you had an exceptionally costly program, and for one of those reasons they don't need it anymore, then you potentially could take this exception. And with that, the exceptionally costly is the key terms. It has to be a significant expense, and we judge these on a case-by-case basis. You would send the information to me, and then we would go over it, and if approved, you'd be able to use this exception. And again, with any of these exceptions that we've talked about, if you have any questions, feel free to email, call, or how you want to contact me, text, and we will, make sure that you're on board and you understand this well, and that you're doing what you need to be doing to be able to meet these tests. And I'm always happy to help. So anytime, contact me. I encourage it highly. As far as the exceptions go, remember to attempt to use an exception if you haven't met all the individual tests in the current MOE compliance year. So always look for exceptions. And you're going to enter those under the orange tab on your MOE spreadsheet or calculator. And when that MOE spreadsheet is sent to you, the orange tab is going to be the exception and adjustment tab. And it's going to look different with each spreadsheet, but bottom line, the orange tab is the one you're going to enter the voluntary departure exceptions on. And that's where all your other exceptions would be entered. And you can also look, the child count reduction exception would be on there. You can look at all that information on that orange tab. And for this past or this current MOE compliance year that we're finishing up, that 2021 year that I spoke of, that was tab 6 of the calculator. Munis. I know all of you finance directors are very familiar with Munis, and DOS is familiar as well. Munis, of course, is the financial system in which districts use to enter all of their expenditures. With MOE compliance, all special ed costs should be put into Munis by each LEA. And it's very important that the special ed related costs out of your general fund are put into Munis correctly, because that's how your MOE can get screwed up. And, there's scenarios that, you would not meet a test or have to pay back if these Munis mistakes happen. And with Munis, program codes 200 through 240 are the special ed codes that are used. That's where you should be putting your special ed expenditures out of that general fund into Munis that would relate to your MOE compliance, generally out of those program codes 200 through 240. A query is done at KDE early each year, and they pull all expenditures made throughout your MOE year. So this upcoming one's going to be, they're going to look at your 21-22 year. So probably January-ish of this upcoming 2023 year, they're going to do this query and pull all expenditures made throughout that 21-22 MOE year, and then they'll give us all of these numbers. And they will typically receive that in January or February, and that's what we use to populate your spreadsheets for each district. And we individually populate spreadsheets for every district. I also want to talk about briefly KECSAC, the Kentucky Educational Collaborative for State Agency Children. All staff paid by state KECSAC funds that support students with disabilities should be included in your IDEA MOE. And in previous and many past years, with a lot of districts, this hasn't been included, and we want to make sure that you include this going forward for your MOE. So again, all staff paid by state KECSAC funds that support students with disabilities should be included. That would include salaries, benefits, supplies, materials, textbooks, furniture, etc. And we have established recently a new Munis program code for this, and I'm going to explain that in detail as far as that goes. So around these KECSAC charges, a new Munis program code dedicated for special ed students who are served through KECSAC was program code 281. So for your special ed expenditures, 200 through 240 is generally the program codes you're going to use. And you also have this program code 281 for these KECSAC related expenditures. And this next slide just gives more detailed information around that. I'm not going to read this, but it just gives, detail around this program code 281 for KECSAC. And if you have these expenditures, you want to make sure and put these into this. Munis miss codes. So with Munis miss codes, that is where you want to make sure when you get your spreadsheet, you want to make sure all your expenditures are correct. You want to make sure everything looks good that's entered into there, because it's really important that you don't have any Munis miscodes. It's common for districts to enter expenditures incorrectly into Munis, and that can create problems. There's two scenarios that typically happens with Munis miscodes. Take a drink here. So one potential error that can happen with Munis miscodes is when a district does not enter a salary for a special ed employee into those 200 through 240 codes. If you don't enter that special ed related expense into there, that can cause your expenditures to be too low, which creates a situation where they do not meet any of the 4 tests. So you incorrectly do not put special ed related expenditures in there. That would make you not meet potentially not meet any of the 4 tests. The other common error is basically the opposite of that. It's when you would enter the salary of a non-special ed employee into those 200 through 240 codes. So you have non-special ed employee, you enter that into there. That's going to cause your MOE expenditures to be too high. So for that year, it'll make you meet the test. But what will happen is for future years, it's going to make your threshold too high, and it will create a problem of you consistently meeting that high threshold in future years. So you would look for both of these scenarios, and if you have either, then you would submit detailed documentation for whatever the erroneous expenditure is to us, and you would email that. And once that has been received and accepted, we would go in and change your MOE amount to either raise or lower your MOE totals based on those Munis miscodes. As far as ESSER funds and IDEA MOE, I would also I'm just going to briefly speak to this. You can use ESSER funds to pay for activities allowed under the IDEA, but we would provide these reminders and cautions. The IDEA MOE requirements remain in place. You have to continue spending from your general fund to meet these MOE compliance requirements, and you do not want to supplant general fund support for special ed services if that would make you fail to meet IDE MOA. So as far as ESSER funds goes, you just want to make sure not to supplant your general fund support for, around your students with special, education and related services, because you have to meet those MOE compliance requirements. As far as the report that we use to run MOE for each individual districts, I've had several districts ask, what report does KDE run? And I'll also specify that our specific office, OSIL, we do not use Munis. We don't have Munis access. When I go into districts and work with them, that's when I see Munis, and, we try to work out lots of different situations. But as far as Munis goes at KDE, there's an area at KDE that runs a specific report each year, and then they give us all those numbers, as I alluded to earlier. And then when we get the numbers, we populate each of your individual spreadsheets. In saying that, districts have asked, well, what's the report that they use to run this MOE, so that, we can look at these parameters. And this is just kind of a screenshot of that report. The only thing that's not mentioned on this report is what I talked about, that new KEXAC code. So that 281, program code 281, would be added to this. That program code 281 plus everything you see here. As far as determining your state and local totals, both state and local, both state and local expenditures are entered into Munis. And the way you determine in Kentucky what's state and what's local is, first, for state, you would look at your Seek Exceptional Child Add-on funds. All districts receive these. Your Seek Exceptional Child Add-on funds is considered to be your state expenditures. And then as to get your local, you would simply just subtract your Seek Exceptional Child Add-on funds from your total expended out of that general fund, and that would give you the local total. As far as Fund 1 additional info, if you received any other state grants coded into Fund 1 and expend fund from those grants on special ed students, you want to include that in your MOE, whether they're expended for staff, supplies, materials, or whatever expenditures those may be. Please notify us if you have these expenditures, as they should be included in your ID MOE for the applicable year and included on the calculator. So everything we've been talking about so far has been maintenance of effort compliance. I told you toward the end of the presentation that I was going to briefly mention maintenance of effort eligibility. That's another process. We're just going to speak to this briefly. All that is anticipated budget. So with MOE eligibility, you submit your anticipated budget out of your general fund for like whatever the upcoming year is around students with disabilities, and you just have to meet one of the 4 tests, and that's just budgeting enough. So if you don't meet a test, you just want to make sure and budget enough to meet one of the 4 tests. And if, throughout the year you end up not meeting those exact numbers, that's okay. You're going to be checked on your expenditures through MOE compliance, and that's where they're going to look at and where you can get dinged on, not expending enough. For maintenance of effort eligibility, you just want to make sure and budget enough to where you meet one of the tests. If with MOE eligibility, and in previous years, we've sent you instructions via email around MOE eligibility. We may this upcoming year and be changing this process to where not all districts will have to do this if you've already met through numbers that we have at KDE. But if you have to do this, you'll be sent detailed instructions via email around this MOE eligibility information. And with MOE eligibility, you just have to meet one of the 4 tests. You have to submit your budget for that applicable eligibility year. And again, you could lose funds through MOE compliance, which is what we've been talking about for most of this presentation, but you won't lose funds with MOE eligibility. And with MOE eligibility, you just have to budget enough. And what will happen is if you haven't met a test through MOE eligibility, you wouldn't receive your IDA allocation or your allotment for that year until you meet that. But you're not going to lose funds. You just have to budget enough until you meet one of the tests. With compliance and eligibility, MOE compliance and MOE eligibility, you'll be able to tell if you're in compliance each year based on that MOE calculator spreadsheet that you receive from KDE, and you'll be able to complete MOE eligibility based on the spreadsheet and email and detailed instructions you receive if you have to do so for eligibility. On the spreadsheet itself, when you look at that, the compliance side is the right side of the MOE spreadsheet or calculator, and the MOE eligibility is the left side of the MOE calculator. And the MOE calculator spreadsheet, that's the tool we use to make sure that you meet your MOE and that you receive for your MOE compliance. And we specifically populate that for each LEA, and that will show if you've met compliance for that current MOE compliance year. The calculator was created by CIFR, that's the Center for IDEA Fiscal Reporting, to assist SEAs, KDE, and LEAs, all of you districts, in determining both requirements of MOE during the year. More information around that calculator can be found at this link. And CIFR provides technical assistance to SEAs across a variety of fiscal areas, and they've been outstanding in helping us, across many areas, and we've worked with them. They're funded by OSEP to help SEAs, across these fiscal areas, and we use their calculator and their spreadsheet as our tool in Kentucky for your MOE compliance. As far as the process in creating MOE spreadsheets for all of you districts, we populate it, and it's populated through the current MOE compliance year based on that Munis query that I spoke of earlier, and we convert the individual spreadsheets and populate all the required informations. The applicable compliance eligibility year would be the only year that you have to focus on for your calculator. So there's not a whole lot in your calculator that you actually have to go in and enter, because we populate all of that information for you. Really, the only things that you have to go in and enter yourselves once you receive it, exceptions if you have them on the orange tab. You want to confirm all the numbers and make sure that you don't have any Munis miscodes. And if you do have Munis miscodes, you would send that documentation to me. And, you just go through the spreadsheet and make sure that, everything is correct. And also make sure, if you haven't met any of the 4 tests, look for those exceptions, and still look for exceptions even if you have met, and do all the pieces that we talked about earlier in the presentation. As far as explaining the different tabs on the calculator spreadsheet, I'll just go through this briefly. It's the MOE calculator, it's color coded. Many states require their LEAs to populate the entire calculator themselves. But again, in Kentucky right now, we populate almost all the calculator for you. If you do wish to complete the calculator on your own going forward, we are available to assist you in completing that calculator for an individual year if you download the blank calculator from Cipher. Tab 4 on the calculator, that's where when you first receive your spreadsheet, you'll be able to see if you've met or did not meet any of the 4 tests in a given year. The red tabs on the calculator, that is where you record, that's budget, and it's recording your general fund expenditures for the applicable year and supporting students with disabilities. But again, you don't go in there and enter anything. You just are able to look on there and see. The only place that you would enter anything was that orange tab that I talked about earlier. The blue tabs on the calculator, that just breaks it down more. You can go on the blue tab and see if you've met or did not meet a test. And if it'll also show you how much you're short if you don't meet that specific test. And then the orange tab, as far as what you have to do, the most important tab, that is where you can go in and look at those exceptions and that adjustment. And with the exceptions, that's where you would enter those voluntary departure exceptions. Also, that's where you would enter if you have any specific replacements. And you can also see if you receive that child count reduction exception and the other exceptions we talked about that you have to get pre-approval through us. Those would be entered there as well, and we would enter those all on that orange tab. As far as the exception adjustment worksheet continued, that's the main tab you need to worry about when entering. If you don't meet all the tests, you want to look for those exceptions. You want to enter those exceptions on that orange tab. And then outside of that, you should also look for those Munis miscodes that we spoke of earlier. And if found, send those to us as described earlier in the presentation. As far as follow-up trainings, we offer various follow-up trainings throughout the year to address district-specific issues around MOE compliance. I am happy to come to a district if you have, and there's a lot of different situations. If you have, MOE compliance issues and you need me to sit down and try to help you get through those, which happens frequently, I'm happy to come to your district to do that. Also, if you have a new DOS or a new finance director, either one or not new, that doesn't have a full understanding of MOE, I'm happy to come and go through the MOE process with you all, go through it in detail, go through your specific scenarios and situations, and just try to get you feeling more comfortable about MOE. But bottom line, I'm happy to come to your district. I do it all the time to help with with your MOE issues. And feel free to call, email me, text me, and let me know what you need, and I will always do my best to provide that. On this last slide gives my email. I also give my cell. Again, feel free to call or text me. Happy to help you in any situation that I can. This covers most everything around MOE compliance, and a little bit we talked about eligibility. Super important that you remembered with MOE compliance to try to do all those pieces we talked about, so that you're never in a payback scenario to where we have to lose any funds for our students with disabilities, and we never want to lose $1 for our students. So thank you. It's been good talking with you all. Contact me anytime, and take care.